Thanks, Theodor Weimer, for joining us. A key part of your predecessor strategy was the merger with LSE. Could you imagine doing such a transformational deal? And if not, what's the focus?
Nick, it's quite clear. We have experienced a failed merger with LSE, and the three exchanges which are bigger than us are far away. We cannot do a deal with them. And LSE is now gone for quite a period of time, and therefore I'm realistic enough to say this is currently off the table. A M&A strategy, which I call a string of pearls, where we invest in certain businesses, is probably the better alternative now.
And what kind of businesses would those be? More in the fixed income area, Forex? What's interesting then?
It's actually, we started to invest last year and the years before on the commodity side, on the FX side. We would love to do more on the fixed income side. On the investment fund services side, we can do more in the Clearstream. We have various businesses. We have a great market share on the investment funds side, and we can we can do more there. So overall, it's a broad set of opportunities which are available for us. Mm-hmm. But as I said this morning, you need always two, right? You need somebody who's prepared to sell, and then you need to find a price which is acceptable on both sides.
Okay. Another area your predecessor spoke a lot about was growth in Asia. We didn't hear a whole lot about that today, and actually a few weeks ago you scrapped the plans for the derivatives venue and clearinghouse in Singapore. Maybe you can tell us why.
Actually, at the end of the day, we have currently a situation that we have G7, C7. These are systems where we can do the business out of our own hub here in Germany. This does not necessarily mean that I do exclude some kind of structures and partnerings with other regions, especially with China or with Singapore. But currently, right, we feel we can develop our business further out of our own hub with our existing systems.
Okay. And then moving on to Brexit, the business opportunity there is clearly in clearing for you guys. Now, we've seen a huge increase in the notionals in January from December of last year when you started, but notionals aren't the same thing as revenue. So can you tell us what kind of market share are you looking for in euro-denominated clearing, and what kind of revenue can that bring with it?
Smart question. In 2019, we would love to get in euro clearing a roughly 25% market share. That would be a great achievement. You mentioned the notionals in December were 5 billion on our side. The total market is 1,000 billion euros per day. Mm-hmm. Notional clearing. We did in December 5. End of January we did 35 billion. So we increased by 600-700% in 1 month, which is quite meaningful, but it's a long way to go until we are at a 25% market share. And therefore we apply a dual strategy. One strategy is we do offer a partnering model for our banks. We ask them to diversify their risk, mm-hmm. right, to mitigate the risk to working with us. We offer board seats, we offer a partnership, profit participation, and on the other side we work massively on the lobbying side in order to convince our politicians to help us to make sure that we get the euro clearing to continental Europe, to the EU 27.
So let me get this straight. That means then that if you had political support for a forced repatriation of euro clearing to the euro area, that would increase that market share potentially even higher. And what's the revenue potential from that 25% you just mentioned?
We are talking about a 50 to 70 million, 50 to 70 million revenue potential.
And if bit of political help from Berlin would increase that market share even higher then potentially.
Yes, indeed. Okay. Indeed.
Super. And are pension funds, asking their banks to reroute via to Eurex rather than LCH? The reason I ask is I can't imagine that many pension funds would be keen on having an extra cost in that sense because their dollar-denominated swaps would surely still be done in London. So why have London and Frankfurt if you're a pension fund and want to avoid the cost?
Of course, it's a very fundamental debate we can we can carry on now, right? At the end of the day, the bigger liquidity is, right, there's a certain centralization of liquidity, and therefore there is no need, right, for a fragmentation of liquidity. But on the other side, it's also the risk diversification. So, listen, at the end of the day, I strongly believe the market is so big, liquidity is so big, we can live with different euro clearers, we can live with different approaches here, and quite frankly, the markets will sort this out finally.